Welcome to Flash Instincts. Today we're going to give an update on Asensus Surgical, ticker ASXC, previously known as transenterix. Flash Instincts, we speak from the heart. Today we're going to look at Asensus Surgical, and we're going to try to see this company from a deep perspective, a conservative look, and we're going to try to build connections. If you like, you can subscribe and hopefully attain generational wealth together as one family. Before I begin, this is going to be a technical analysis video. I am not giving financial advice, and if you'd like more content like this, you can subscribe to the channel. I'm going to begin with an explanation of what the Golden Cross is. The Golden Cross is just a trend line or a trend filter. You can use it as your advantage, either to buy or sell. It does not guarantee profits, okay? It's just one indicator. Now, according to Google, a golden cross occurs when the 50-day MA or moving average crosses above the 200-day moving average, and vice versa is known as the death cross. Okay, so that's when the 200-day moving average crosses above the 50-day. Okay, that is saying run. It is a bad situation, terrible situation. You literally think about it. Hey, in the average span of 200 days, if the price is above and the 50-day average is below, that means in the short term, it is going down. Now, it's noted that, hey, be careful of blindly trading the Golden Cross because the market can whipsaw you, okay? Basically fake you out. You can use the Golden Cross as a trend filter. Look to buy only when the 50-day is above the 200 moving day average. So now that we have an understanding of what the Golden Cross is, you'll notice that the 200 moving day average is indicated by the blue line and the 50-day MA is indicated by the gray line. You'll notice right here on the 2nd of February 2021, we enter the Golden Cross. This is a bullish indicator. As soon as it hits, guess what happens? A bunch of catalysts occur. Huge insider occurs a few days after, right after a few days. On this dip right here. This was a huge insider purchase on this date, around the February 4th. As soon as this happens, and the momentum carries along with the general positive notion of biotech technology, we had an incredible gain. It went from $3.10 range all the way to $7, near $7 of a peak. That's about 100% gains. Whenever you get 100% gains, people tend to take profits. Right afterwards, we're having a continuation of the sell-off. For a moment, we were still above the bullish signal, above the 50-day MA by a huge margin throughout the whole month of March during the correction. However, recently, a scare has slowly creeped up into this company, and a lot of people are panic selling. We also have companies and big shareholders shorting Asensus Surgical. Now, what is approaching is a death cross. When the 50-day MA, when this gray line goes below, when it goes and overlaps with the 200 MA, that means there's a death cross. Now, this death cross is also can be used or manipulated to make a lot of average investors panic sell, especially if you have most of the stock. Let me reiterate something. Companies essentially go up based on millionaires or billionaires investing. I'll give you an example like Bitcoin. Why does it keep going up? Because we have billionaire companies, millionaire companies supporting Bitcoin. Likewise, if this company gets shorted by huge stockholders, it will, for the short term, bring it down. However, you'll notice that we did not enter the death cross yet. We still have a little bit of ways to go before we touch the death cross. But this could also be used to scare a lot of the new investors on transenterix. Make them panic sell and exit this stock. Exit with a loss, okay? Now what these investors, these huge millionaires, the ones that like this company, perhaps a hedge fund, what they can do is they can put out propaganda news as well, and they can also rebuy or re-enter the position, either by call options or they can simply buy the stock. And this would bring the price back up, okay? This is two options that we can see based on the analysis of the Golden Cross. I hope that makes sense. Now, I'll keep it real with you. A lot of people are saying there are no more catalysts in the upcoming future, but I beg to disagree. Okay, so you see, when this company got out from its penny range of like a couple of cents and it hit the dollars and it went above towards the $7 range. It grew momentum. It also grew a lot of people believing in the stock. Now, a lot of catalysts occurred along the way, and these catalysts have not been taken into consideration regarding its price due to the market sell-off, especially towards the biotech field. So what I mean by market sell-off in the biotech, you can clearly look at it by looking at the ETF known as XBI. It's a Spider Series Trust for the biotech sector. Okay, now you'll notice that, hey, in comparison, like the NASDAQ or Dow or SPY in general, they're actually kind of recovering already. However, this is the biotech ETF, and you'll notice that Asensus Surgical is going exactly parallel to the overall biotech sector. In this chart for XBI, you'll see a huge sell-off. This huge sell-off, it is that of what occurred last year during the same time of March. You can even argue that this sell-off is potentially more devastating or more prolonged than last year. However, every time there is a sell-off, remember, technology always goes forward, and we do rebound. That's where we're at, perhaps a rebound for Asensus. Let me repeat, we had a lot of catalysts, right? But these catalysts did not take into effect for this company because of the overall market correction. That's the difference. There's a very key indication here. Now, we have to keep in mind that, one, we have a huge public offering and direct offering that occurred around the $3 range. This was before the Golden Cross. We also, from March 2nd to February 25, when Asensus passes through the Golden Cross in a positive way, a huge insider purchase occurred here. Now, we also know the third thing is that, hey, when a company gets revitalized, especially from being dead for a long period of time, usually that run has a lot of momentum behind it. In essence, you can compare it to a train that has just initiated its engine. Now, once a train begins, it doesn't shut down right away, okay? Usually it goes to its destination. Transenterix simply has just begun its journey, and it just went to the next station and is catching fuel. It needs more electricity. That's what's happening, guys. The momentum has not ended, and in order to reach the final destination, time is needed. Another very key indication of more potential bullish run for Asensus is the name change of the company. Why would a company that doesn't believe it can rise up or do well in sales decide to remarket itself out of nowhere? Why would it do that if it doesn't believe in the bigger picture? Logically thinking, that is a huge catalyst. It's a way to market and sell the product worldwide. Now, Transenterix was hard to say and it was not catchy. Asensus Surgical, it sounds better. Now, another thing you want to take into consideration is, hey, Transenterix, or aka Asensus Surgical, right? It recently, very recently, in the peak of the market correction between February, March, and early April, between these specific dates, during the biotech sell-off, Asensus Surgical got a general surgery FDA approval in the United States, which it never had previously before. This means that they can now produce or perform surgeries throughout America. Furthermore, they can sell their products more frequently. As time progresses, as they produce more research and show the work of the surgeons, the only way is up. This FDA approval is good for the long-term future of Asensus Surgical. Now, with that being said, and with all of this catalyst on the way, if you still do not believe in this company, and if you are being captured by this sell-off, especially by the corporates, the big shareholders, the ones that can bring down the stock, if you get convinced to sell off, and if you cannot hold, then I'm sorry, and this company is not for you. However, Asensus Surgical is made for those that think for the long term. It's a future stock, it's a future company. There was an article that said, hey, you have to take into consideration that, hey, Asensus Surgical requires patience, that of a surgeon. Patience is a key to life in general. You have to be patient with a child. You have to be patient with Asensus Surgical. Just like the way you watch a little child grow up. You have to let this company slowly mature. Guys, Asensus Surgical has had a huge sell-off. However, I will tell you this. We do have a major big support on the current price action right now. Okay, at the $2.87, this is a huge support. Do not be surprised if you see a bounce off of this support. However, Again, keep in mind that the entire biotech field, even to this day on April 8th, 2021, the biotech field has not reversed yet. So just so you know, the only way you get loss in the stock market is when you panic sell or sell when you're negative. You'd never lose money unless you sell, okay? So if you're holding and you're holding strong, and if you can withstand all of the nonsense going on and you see a bigger picture, that's the only way to make money. Now, this is not financial advice, but this is how I trade. This is my personal opinion. So let's look at the RSI in the 1-year chart. I like RSI. RSI is a good momentum swing trade indication. So I'm going to go back to 1 year of September of 2020 for this company, okay? And I'm going to relate the information of the RSI. Okay, so the RSI is just one indication, just like the Golden Cross. Now, every time for the year, when transenterix, aka Asensus Surgical, when it hits the RSI number of 30, which is in the range of oversold, meaning people have panic sold, or a lot of people are selling the stock. Every time when it hit this in the yearly chart, in the yearly RSI chart, it has recovered, bounced back very, very strong. But it took time. It took a month or two to go back to RSI levels of 70. Okay? Again, from November when it hit 41, it bounced from 41 all the way to 91. This was one of the biggest runs in December of last year. Then, again, Asensus Surgical went down. It went back to 50. You'll see that it went to a 50 RSI. After that, it had a huge run up. Making RSI at 90. A little sell-off towards 60. Okay, this is when a lot of people entered. A lot of my friends entered at the $2 range, okay? $2.50 to $3 range. If you're in this range, it's not end of the world. Then, again, it was a huge run-up towards our RSI level of 80. Now, following the pattern of last year, if you're seeing the bigger picture, guys, you will see that a steady and slow decline of the past 3 to 4 months, making RSI levels go from 80 all the way to 33, guys. We are reaching extremely oversold regions for Asensus Surgical, ticker ASXC. Now, I know it is hard to hold. I know you're seeing other stocks, and it's very, very hard, but you never make money overnight. You never do. People who are showing those tickers blowing up one day, I made 1,000%, I made 5,000%, 500%. They are not revealing the truth because there are other tickers that they are down on. You don't always win. The ones that are patient, those are able to reap the benefits. Okay, if you're patient, you're not panic selling. If you're patient, you believe in the process and you believe in the company slowly maturing. That is what transenterix is about. That is what Asensus Surgical is about. Guys, this company is a competitor of ISRG. And the thing that we have is that it's robotic related, right? That's the current trend. Robots, tech.
In addition, we have augmented intelligence or machine learning capabilities added to this robotic system. It's different from ISRG, and perhaps it could be a step to the future of robotic surgery.
Asensus Surgical is able to enhance doctors based on previous surgeons. Now, if you don't believe in this and if you don't see it changing the world or the surgeon's outcome, then it is not for you. Now, we do have huge resistance at the $4.30 to $4.50 range. We haven't been there in a long time. I would not be surprised if we have a little solid run and the market does start recovering. We go from this oversold region and we slowly trickle back to the $4.50 range. I would not be surprised. Many people will take profits at this range if it does reach this range. So it may tend to go back down. We should consolidate if we do go up to this resistance level and slowly go down. As long as we consolidate in this region between the $2.80 to the $4.50 range, that is a good sign. For the long-term picture, that is great. Now, one last thing before I go end this video, I'm going to tell you that we have a beautiful, absolutely beautiful 3-year cup and handle. Now, a cup means that, hey, you have a huge sell-off, consolidation, and a breakout. That's what a cup is, okay? Huge sell-off, right? Consolidation, meaning a lot of people are picking up shares and holding, and it's not going below that threshold, okay? It consolidated for about a year, okay? Year and a half. Then it had a huge breakout beyond our imagination. I'm telling you, it went from 60 cents all the way to $7. This is life-changing money, okay? If those people, the ones that bought the shares and believed in the company during that huge consolidation period, they're multimillionaires. Now, let me tell you something. The momentum has not ended, okay? We have just entered the first year of the bull market. Sell-offs do occur, it's normal. But if you believe in a bullish run, if you believe in the big picture, you'll see that the bullish sentiment has not ended. Now, the thing that we do have is a huge cup and handle formed. The handle has been formed, guys. The length of the handle is determined based on the power or the height of the cup. You'll notice that we have almost more than 100% of retraction of making the handle. As you have more than 100%, we have lost almost 50% of the gains that appeared from its biggest breakout run, okay? Now, this means that huge number of people took profits. There was an enormous amount of people taking profits. A lot of people were panic selling at the same time. Those that bought very high have taken huge losses. Unfortunately, it is quite obvious to see that. It hurts me to know that other people are losing money. And the point of this video is to educate you and help you not lose the money. I really don't urge anyone to panic sell, because at the end of the day, the ones with the huge money are controlling the outcome of this company. That is very clear. It is very hard to fight against big money, but what we can do is ride the waves. As normal investors, you're supposed to ride the wave, okay? Now, right now, we do have a cup and handle. This is a key, very key entrance point into this stock. You can also add or average down on Asensus Surgical if you bought very high. The point of this company is long-term growth. And two, you can think of this company or stocks like collecting cards, and you do not want to let go. You want to collect as many of these cards or stocks as possible, because at the end of the day, at the big picture, we really want to see those big numbers. We really want to see these huge numbers. If it goes to $17, beautiful. If the momentum is able to carry and go all the way to $80, even beautiful. These are lovely numbers. If we can wait 2 to 3 years and see numbers even half of that, it's nothing but a blessing, because right now we are at the beginning, ladies and gentlemen. And in the beginning of any long journey, there's ups and downs. There's struggles. There's direct offerings. There's public offerings. There's panic sellers. There's people coming out with negative propaganda, negative news. These things are going to happen, guys. But it's up to you to believe in the big picture and be solid in your investment. I hope I was able to help. Make sure you hit the red subscribe button, guys. I got much more videos on the way, and we really care to build a family here. Until next time, guys, I'll see you.